You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Welcome to Volatility Views, the premier program for volatility traders. Each week, we'll take a deep dive into the world of volatility with in-depth analysis, trading activity reviews, strategy breakdowns, cutting-edge education, and much more. We'll also bring you exclusive conversations with the traders, researchers, and asset managers who are reshaping the volatility landscape. If it involves volatility, then you'll find it on Volatility Views. Volatility Views is brought to you by NASDAQ. From its inception, NASDAQ has been an innovator and agent of change in the financial markets. It's in our DNA, from the development of electronic trading to our drive to bring enhanced functionality and world-leading technology to our suite of 6 options exchanges. We exemplify customer focus, consistent technology, and streamlined solutions. Now NASDAQ is proud to launch the NASDAQ 100 Volatility Index, ticker symbol VOLQ, to its suite of exchange indexes. VolQ uses only at-the-money options to provide a precise measure of NASDAQ 100 volatility. Learn more about this exciting new volatility product at www.nasdaq.com/VOLQ. NASDAQ, leading the U.S. options market and continually rewriting tomorrow. And now, it's time to take a deep dive into the world of volatility. It's time for Volatility Views.
All right, everybody. That music means we are back. It is Friday. It is noon Central. It is 1 p.m. Eastern. Do you know where Vol is? Do you know what's going on in the world of Vol? Well, let's find out together. Yes, it is time for Volatility Views, the premier program for volatility traders. My name, of course, Mark Longo from theoptionsinsider.com, as well as, of course, from the network upon which so many of you are busy driving up my bandwidth bills to record levels out there. We love you all. We welcome you all out there. Thank you to all of you who made the last now 16 years. Yes, this January, our 16th anniversary. Sounds absolutely insane when I say it out loud. If we were a kid, we could drive by now. So, yes, been doing this options podcast thing for a while. It's been fun to watch the evolution of the space, the evolution of the audience, the evolution of the network. So many new shows on the network these days. So many new listeners. We love you all out there. Remember, if you're on the on-demand side, one of our many new, or perhaps you're a long-time listener, all we ask, if you like what you hear, do keep rating and reviewing on the on-demand side. It really does have a clear correlation to new people discovering the content. So we do thank you all for that. Of course, if you want even more content in your lives, you don't want your week to end after Vol Views. You want the content parte to continue, perhaps, dare I say it, with a little bit of the old options oddities after Vol Views, where myself and the Rock Lobster get up to all sorts of crazy trouble. Well, then you got to go to one place to find that, as well as live access to this show, as well as the archives. We have a couple of 100 hours worth of great episodes up there for you folks now, as well as pro Q&As. Talking Vol, we just had Mr. Scott Nations on there recently talking about Vol Q and everything, the creator of that product. So a lot of great Vol Q&As there as well. Only one place to go. Theoptionsinsider.com/pro is the place to go to learn more about all that fun. And let's see who's joining us on the old program today. First, we're going back to the dark and stormy, some might say snow-covered shores of Maine. I think the clam pirates are finally taking a break for the winter because they got multiple feet of snow out there. He is the Rock Lobster himself, Mr. Andrew Giovinazzi from optionpit.com. Mr. G, welcome back to the show, sir.
Hey, it's good to be back. Yes, it is snowy. It's cold, a little icy. My driveway's kind of an ice rink, but we're surviving. We are surviving. But the clam pirates are definitely, there are no boats running in the morning in these frosty, cold temperatures.
That's what you pay the big bucks to live in Maine for times like this, sir.
Yes, yes.
Feet upon feet of snow-swept tundra as far as the eye can see. Good times out there. Not quite the same thing here in downtown Chicago. And now we move back to New England, to an area that's actually back to the coast of New England, to an area that's mostly, the seasonal tourist spot, Cape Cod. I've only been there in the summertime, but he claims it's a winter place as well, because we are joined for the first time this year and for the first time in almost a couple of years here by our old friend, Mr. Dave Lincoln from the Short Vol Show over there on the old tubes. Mr. Dave, welcome back to Volatility View, sir. It's been too long.
It has indeed, and I'm really excited to be back with you fellas. My old boss, Andrew G., and fellow ex-SEBO compatriots.
Always a lot of fun to be had on the show, so let's get to it. A little bit of the old Volatility Review.
It's time to break down the latest developments in the volatility trading world. It's time for the Volatility Review.
All right, everybody, let's do it. Let's commence operations here on the old Vol Review. This is, of course, the portion of the show where we break down what's lighting up our tape from a vol trading and trending and analysis and unusual activity perspective, not just for today, but for the entirety of the week that's going on out there. And before we even get to that, before we even get to this year's stuff, as I mentioned, Dave hasn't joined us since the crazy, heady days of 2021. So before we get into what's going on now, we got to look back a little bit. Mr. Dave, haven't joined us in a while. This is, of course, your first appearance for this year. So let's start by looking back. Obviously, you're looking at the vol markets day in, day out like the rest of us. When you look back at this mad, topsy-turvy year that was 2022, what really stands out for you? What were some of the highlights, the trends, the trades that when you look back really resonate to you?
Well, I mean, last year was a very unique year in terms of the markets. And for many traders who hadn't seen a down year, I mean, the NASDAQ was straight down for a year straight. And a lot of my typical strategies and volatility were kind of put on hold as the market was in a unique spot. And I saw a return to form in the vol products as things kind of settled down a little bit. We had a bunch of periods where we kind of bounced back and forth into backwardation, but really it was a time of putting my current strategies on hold and kind of staying on the sidelines a little bit with the markets continuing to crater lower. We'll see if that kind of turns around now. But, vol back down to sort of a reasonable level around 18 right now. And the term structure looking pretty healthy right now. I think it was a year of kind of the VIX sort of underperforming in a way. A lot of times it seemed to be lower than you would think it would be. But for me, I've been largely on the sidelines and playing individual issues more than the VIX products. UVXY is at that area now where it's down in the single-digit range, and there's not as much meat on the bone to play with in that one. You know, that's one of my favorites. And so kind of waiting for these reverse splits. I'm sure we'll get into that a little bit later in some of these products.
Oh, was there a reverse split, you say? I had no idea, Dave.
No, there hasn't been yet, but I'm waiting for that to recommence some of my trades because it's hard to trade a product that's a $5 product.
Well, I was, of course, joking. There was a reverse split in one of them. Not maybe the great shakes we all wanted. We'll get to all that in a second. Really quickly, Dave, before we get away from last year, there were a lot of narratives that came out of last year that a lot of people were really focused on. One of them was this persistent drumbeat that VIX itself was just broken last year, or that it was muted. It didn't really give the upside pop that a lot of people wanted out there. A lot of people were also fixated on just how much upside was open in a lot of the vol products like VIX, and extreme upside. You're talking pars and above strikes that had open interest for days. Just going crazy out there in the world of volatility, it seemed like, left and right. There are a lot of different competing narratives going on throughout the year. Any of those resonate to you, particularly the fact that people beating that drum beat that, VIX is broken, VIX is muted, or VIX just wasn't doing what people wanted last year? You subscribe to that, Dave?
Well, I don't think it was broken. I think it was performing the way it was set up to perform. But people did want to see the sell-off was somewhat orderly, and when you have a somewhat orderly sell-off, you're not going to see these huge spikes that they're expecting. Just because the market's going down doesn't mean volatility is necessarily going to go up. And when it's orderly, it's been a grind to the downside a bit. And I attribute the VIX not being as high as some people would like it to that slower grind, as opposed to like a huge rip down.
And are you playing in this whole crazy zero DTE phenomenon? Because that was the other big takeaway from last year, right? Every one of them others just trading all day, instantly, same day contracts. Have you been sucked up in this phenomenon, Dave?
Not so much. My advice, of course, to people is, if you're going to play that, I would be very careful to the short side. Maybe play it to the long side a little bit, but to the short side is pretty dangerous. When I was in the 30-year bond pit, bond options pit, there was a guy next to me that would play 0 days until expiration trades, and he would bet like $200,000-$300,000 on one straddle per day and trade huge size and make money on that. But for me, that kind of stuff is a little too risky for me.
Man, more power to that guy if you can make it work consecutively over time. That's a neat trick. All right, let's get out.
Exactly.
Let's get out to what's going on out here this week, listeners. And, it's another day where we're looking a little green out there. S&P up about 0.33%. That's after coming in earlier this morning and selling off, getting back down to about the 4,050 level or so. Seemed like we were maybe putting in a red day, and then the numbers coming out, inflation numbers dropping to a 15-month low. We all know these days everything at the end of the day backs into inflation, which in turn backs into the Fed. So the markets turned around and have rallied. S&P rallying about 20-odd handles from that low. The Dow up about 0.2%, and the NASDAQ up about 0.85 out there. So it's still green out there, but not exactly robust. There are still a lot of things hanging over the market, not the least of which being the actual Fed coming up next week. But that didn't stop them, listeners, from really coming for the vol today. I kind of thought they would keep their powder dry a bit. We do have the Fed next week. I didn't think we would see perhaps this aggressive of a vol move going into the weekend way before the Fed as we did. But clearly, people are already pricing vol past the Fed at this point. The Fed's a done deal. Nobody seems to care, because coming into the show, listeners, we were at an 18 even in VIX. Yes, an 18. I've been saying for a while, we might threaten, the 18 handle, get into like an 18.95 or something like that. No, we were at an 18 even. In fact, we did dip ever so briefly below it down to 17.97 today. We had a 17 handle in VIX today, with all this other stuff going on in the market, with the Fed still looming on the horizon, still a lot of earnings to come, and we hit a 17 handle in the VIX today. They came for the vol today, listeners, so nobody wanted to own vol going into the weekend, which in and of itself, I think, is an interesting sign. VVIX, the vol of vol itself, continues to go the way of the dodo again after getting juicy again over the past week. It's down to about an 80 right now. That puts it down a point from where it was this time last week. So a lot to unpack. Let's go out to the snow-covered shores of Maine. Mr. Rock Lobster, let's start there. Are you as surprised as I am that they just came for it today? They did not care, sir. If you had a bid in vol, they whacked it.
Yeah, I mean, when I was surprised, because I have one of my strategies, my students on Wednesday, like, because the curve is kind of, we are a little flattish in the front end, and normally I might, I have kind of like the short SPY, short VIX trade on in Contango, and then we had but when the curve flattens up a little bit, I will buy a call, and it was like right on the enter, and I go, oh, the Fed, thing is coming out next week. There's no way we rally big between Wednesday and next week, right? And of course, what happens? I think we had a 60 handle rally in SPX right from there. So the trade's still working out because vol's finally coming in. So yeah, I am surprised, but this is the deal. The market basically thinks the Fed's going to do their whatever raise is, 25 basis points. Inflation is slowing down, but prices are not coming down yet. Like those, so all that stuff is positive. Of course, I have other ideas why I think there's inflation and why there's wage inflation, but I'll save that for another show. But I think a lot of those policies are starting to be reversed. So this is kind of the slow gain. It's slowly unwinding, basically. Basically just undoing all the stuff that we've done for the last 2 or 3 years. And as far as from an inflation point of view goes, okay, now everybody's like, okay, now instead of just waiting for the Fed to game the market with rate changes, now folks are actually looking at, okay, well, what's going to grow? What business is going to, like, we're back to kind of economics again after the shenanigans of the last 10 years of, basically Fed enablement. And I'm glad that that's going away. We're getting an inflation, an interest rate that really is relative to what prices are doing is more correct. Businesses adjust very fast. And, my pet theory on this is that the entity that suffers the most will be the federal government because they can't borrow for free anymore. Now they're stuck in having to make some hard decisions about how much they're going to spend. But of course, we know that they'll never do that. But they will be forced to just because of the cost. And interest rates are so high. So from that point, I'm surprised that they took the ball down this aggressively, this fast. But there's a little weekend coming off today. But I'm looking at all the VIX puts that I own, and they're up pretty sharply at this point. They were up actually a little more this morning, but still, doing okay. So, I guess my sense on this is, you look at this, you look at kind of the action. You would never thought that QQQ would be up with Intel down $2, which is like what, 8%. So there's a little bit of a surprise there. But we still have some other big tech earnings coming out next week. So it is surprising they took it down this fast, but it also looks like the market is now looking for, hey, what companies are going to make money, what companies aren't going to make money. And we go back to what I would call, like normal economic, a little bit more normal market cycles. And that would also bring more regular market, stock market activity down, which is, Dave knows, is like, we haven't been out of zone 3 in a year, right? So we've been in the upper half of volatility for a full year. And that's a long, long time. And I'm sure Russell Rhodes would have some data on that, but it's very long for vol to be that high. So, the rate thing has done its thing. They're still going up. But I think at this point, people expect it and they don't care. And they're ready to move on to, I would say like a more normal market cycle with the Fed kind of getting out of the game. And that generally leads to lower vol. And I think people are trying to get ahead of it now, especially when we talk about some of the trade that's been going on. And, there's starting to see some action in some 16 level puts again, as we were joking, 2-3 weeks ago, trying to scoop some of those puts. All of a sudden, they don't look so it doesn't look so stupid.
Call me up when those June 15 puts are like $2 bid. That's when we're talking. When they can catch even a penny better bid, then we could talk. No love for those things.
Yes, but you'll get some love soon.
What's this Delta thing you're talking about? Who cares about that, sir? In the vol market.
We don't need no stinking deltas.
We don't need no stinking deltas. Mr. Dave, this is the kind of market you live for. You named your entire show around a day like today. I wish we could say we had the foresight to know today was going to be an aggressive down day in vol, and so we brought you on just for that reason. It just happened to work out that way. Serendipity, our best friend at the end of the day. But you have to be just smacking your lips on a day like today, Dave. So what's lighting up your tape out there on a day when it's all short vol for everybody all the time?
Well, I've been hyper focused on Tesla and Tesla earnings, and that stock has had a tremendous rally off the lows. I think its lows was like 101. Now it's 175. And I think it's provided some leadership. And the triple Q also is pretty far off the lows. Now, I think a lot of people that I've been listening to have been talking about us kind of crossing above the moving averages, the long-term moving averages. And, is this turning into a bull? Is this going to be the turnaround here in the market? And are we going to move higher from here? And I'm pretty bullish on the market this year moving forward. And I've been bullish on it for a month or two now. And I think that vol coming in is just a reflection of the conditions improving in the market now. And like Andrew said, we haven't been down back to, when I first started trading VIX products 5 or 6 years ago, we were 12 to 14, 12 to 15. Maybe you get a huge spike up to 17. We haven't seen that in a while, but we certainly could moving forward here.
Are you going to rename your show the Tesla Show? You're into Tesla now. I didn't know that, sir.
Well, it's like most SIBO market makers during normal times would never be bullish the market. But we just had such a big down run that I'm in this new territory where I'm actually long stocks, and it's new for me. But it's a point where we're well off the high. So why not give it a shot? I guess.
I got Andrew talking all this optimistic stuff in there, and I got you. That's it. I'm hitting the bid on everything. I'm short it all now.
Get out of everything.
I'm fading the hell out of everything. I was already lukewarm on this market to begin with, but you guys all loving it up. That means I'm hitting the bid. Cash, baby. Cash is the new king. Money markets are crushing it out. They never had more inflows in their history than these days. So someone's not loving this market. But yeah, it is crazy time out there. Let's go out and see what's going on from the vol futures perspective. Mr. Rock Lobster was talking about contango out there. We are pretty much back to a normal contango-y type of shape out there. Coming into showtime, we had the Feb future obviously jamming off the board last week. Feb future down nearly 2 points, about 1.8 points, and a similar amount for March, down about 1.7 points. So that front two futures moving in lockstep, which we saw last week too, and is kind of weird in and of itself. Dave, when you're not out there drooling over Tesla, anything catching your eye out there in the land of the vol futures this week, sir?
Well, I don't generally trade the futures specifically. I'm more into the ETPs, but I was looking at it before the show, and the curve just looks very healthy. There's no sort of warning signs out there, of something looming, and so that just is, the volatility futures are not predictive, as we know, but when we look at and we see just this normal activity. It's just a sign that that there's not a danger on the horizon, and that's kind of how I read it right now.
It is a pretty gently sloping curve. Unlike recently on the show, we were talking about it kind of having a little hump in the middle there and topping out in that June to July timeframe next year, which, as you know, listeners, is not normally a hot time for vol. Right now, we do see the curve topping out where you would expect towards the end around their September timeframe. So you're talking about a 5-point difference or so between the cash right now and that SEP future, which is pretty healthy, but also a nice gentle slope up to maybe closer to what you'd expect out there in the vol space as well. Mr. Rock Lobster, you called this a normal curve before. What's catching your eye out there in the term structure this week?
Yeah, I agree with Dewey. That was his old acronym, by the way, if everybody's wondering. But you're getting, so we've had, so normally into these, because the CPI and the FOMC minutes have taken on like over the last 8 months, right? So there's always like a trend with vol, meaning what makes the difference? When Dewey and I and you were trading, did anybody care that the FOMC meeting, right? Like, did we ever care what they said? No, right? Because the Fed was not actively engaged in shenanigans.
All that mattered was the briefcase. How thick was the briefcase? That was it.
How thick was the briefcase? And then the Fed would say something, and then nobody would, there'd be all the markets go really wide for 3 seconds, and then they'd be like, okay, and nothing would change. Literally. I think there was only one time in the mid 90s where the Fed rose rates because of the internet, thing. And it was the right thing to do. They're like, hey, we're just taking everything on 50 basis points or something like that. And everything like, and then, bond market was all pissed off and everything. But, and that was probably the last time I remember rates going up. That was like 30 years ago. So I think the market had to adjust because, nobody knows what's going to happen. And, well, people are going to spend less money on a house or again, when the market has a lot of unknowns, it has a hard time. But from a curve point of view, we are going, so like Option Pit has this little theoretical value we did, and it's an observation of all the future closes over the years since they listed VIX. And right now it's coming back in what we call like a normal phase. So, there's sort of like a normal forward vol, like average where, the front end of the vol curve, front end of volatility gets a little lower because short-term volatility generally is less, most of the time, except in 2022, right, when it was all the opposite. So you're starting to get kind of this, like a more normal shape where you've got less vol in the front and then vol is more bid in the back, and it's a normal thing. So you have all these pumped up forward vols in the back month, which is why the VIX curve looks like it does. And then now, we're getting almost back to that. But, prior to this, I think the December cycle, no cycle, ox cycle, we got this really flat or upward sloping curve into these into the Fed or CPI number, because everybody's like, what's the next number going to be? And now it's I think the market's kind of assumed, okay, well, inflation's still going up, but not as bad. Okay, so it's not great, but it's not as bad as everybody feared. And the Fed's going to raise rates, but not as fast as they did, let's say, in June, July, August. So they just know that. So the more, I guess, traders assume they know, that's just okay. Then there's a little less vol in the future, and then all that stuff comes in. So right now, for the first time in probably 2 weeks, I would say, I'm getting close to what I would say is like a normal contango. So when I see this as these numbers come down, historically, that's generally been bearish VIX cash when we have this curve getting closer to our fair value number. What happens is the futures all those back month vols kind of sit there, and then 30-day and in vol starts to just kind of tank a little bit because there's less. We're not going to go to 4,200 tomorrow. We're not going to 3,800 tomorrow. So, and then all those vol, that 30-day vol comes in pretty substantially, and the back month kind of stays where it is. And then, and that's basically how the curve shapes. Now, the caveat, and Mark and I were talking about this morning, is this zero DTE. And I got my students are asking me, has the zero DTE thing affected VIX? And I was trying to from a, all vols connected in the SPX, right? So if you're trading a contract that's going to expire today, it is still connected by forward vol to a contract that's going to expire a month from now. However, that, that connection is tenuous, right? Because the contract's expiring today. But it does allow infinite gamma to be acquired by somebody. So you're not as worried about that short vol position in the short term. And I think that's been, and I'm still trying to figure that out. I'm sure a smarter, some of the smart vol guys you have that are real statistically based, and they kind of see how well, I'm kind of a meatball vol guy, just sort of see how things have traded when I was, when I traded. It's okay, this is how vol went. It goes up, goes down, does this, does that. But when I see this, there's definitely something to having that infinite gamma available to the liquidity provider, and at the same time having to provide infinite gamma at short notice. Now, they can rip that vol super high really fast, but it's still there, and I think I'm not quite sure what kind of dampening effect it has on VIX. Maybe that's some of the reason why VIX did not go as high as it could have, because they didn't need to. And it also might have been a reason why, it took volatility took so long to come in, even when the market was kind of rallying and stuff, because we never really got that huge, generally when you get a pretty strong rally, VIX gets down to 16, 15, 14 or something like that. We never saw that. So I think it could cut both ways from those zero DTE options. But as of right now, the setup is bearish VIX cash, which means, 30-day vol and SPX, the actual physical, like the straddle, I could see it coming in another, 20, 25 points by the end of next week. Again, depending how the earnings go and all that other stuff. But it's looking like it's going to go like that. And we're going to see, strangely enough, it will probably be the vol we started last year with, which I believe is like 16.5 or something. So, there is a lot of symmetry to how vol trades. It's like we went through this whole cycle just to get back to where we started, which is a lot of what volatility is ultimately, right? It goes up and then it goes back down. So
it sounds to me like Mr. Rock Lobster, if I can read between the lines there. It sounds to me like you're coming on board my rebranding of these zero DTEs as gamma bombs. You're on board with that now.
Yeah, I think it's not a bad way yes, I am on board.
Hey kid, come sling some gamma bombs. You're hanging out in the alley, you got your trench coat, you open it up.
Kid, toss some gamma bombs.
Yeah, kid, you want some gamma bombs? Just think of the branding potential there. Who wouldn't want to trade a gamma bomb? And also you have no recourse to sue if something goes wrong because you bought something called a gamma bomb or you sold it. Even worse. So yes, there we go, listeners. Gamma bombs, they are indeed. Let's keep on rolling here. Out to the land of the big mothership vol products. VIX putting up some respectable numbers today. 472,000 contracts. Go figure. They annihilate all the vol, and VIX will put up some numbers. And that's pretty much what we're seeing out there today. It looks even more impressive when you see that the ADV has continued to go in the wrong direction since our last show, listeners. It's down to 521,000 now. It's down another 34,000 contracts from this time last week. So, spoiler alert, probably going to hit that today out there, but that's a pretty light ADV for VIX right now. But hey, we're starting to see things pop off again this week, so maybe we'll see that start. We were just kissing 600K not too long ago, and then kind of gave all that back. Maybe Fed week next week will contribute to that, or maybe not. Maybe people will keep their powder dry waiting until the Fed, so we won't see a lot of paper until after that. But if today's any indication, people are not reticent about trading before the Fed right now. So intriguing times we are in. Also intriguing, listeners. If we break down the top 10 size positions, what are the big dogs in VIX right now? What are these size, big money positions in VIX right now? Looking at the top 10 right now, you cannot find a single put anywhere in the top 10 right now. It is 10 calls, no puts. That in and of itself should be interesting to you. First off, so the few puts we had, I think we had one last week. That one probably did all right. So they probably could have cashed it out. I think they were near dated too, so they could have rolled off the board. But either way, massive down day in all things vol, and not a single put to be found in the top 10 in VIX land right now. I leave that up to you, to listeners, to ruminate on. It only cost you 130,000 contracts to break into the top 10 today. That ain't a heck of a lot. And that gets you to the Feb 60s. And also, spoiler alert, it's going to be all this kind of stuff because it's all calls. So strap in for some upside. Number 9, 166,000 of the March 40s. Number 8, $1.69 of the Feb 25s. You know, there we go. Now we're starting to see some actual, shall I say, sane strikes coming in. Oh, no, I take that back. Number 7, 170,000 of the March 80s. So we're right back to it. Number 6, $1.75 of the the March 30s. Even the 30s seem crazy optimistic now, given where we are at 18. I hit a 17 handle this morning, listeners. Number 5, 179,000 of the Feb 70s. Right back at it again. Number 4, $1.87 of the Feb 24s. Okay, there we go. Some reasonable paper making its way into the top 10 here. Number 3, $1.88 of the Feb 80s. Up, right back at it. Number 2, 212,000 of the March 75s. And the number 1 size position in VIX options right now, 221,000 of the Feb 30 calls, listeners. So intriguing stuff out there. Have you been starting to play again in VIX upside? Are you all in on the puts right now? Curious. Hit us up. Let us know out there. Let's see what's lighting it up out here this week, listeners. Today, like we said, a pretty active day. 472,000 contracts on the tape. The big dog today, 36, almost 37,000 of the March 18 puts. So there are puts going up, but just not enough to break into the top 10 out there. 20,000 of the Feb 19 puts from number 2. Then number 3, 19,000 of the March 65. So they're right back at it, listeners. Number 4, 18,000 of the Feb 18 puts. And number 5 today, 17,000 of the Feb 24 calls. Yesterday, a lighter day, 421,000 contracts on the tape. The big dog yesterday, 29,000 of the Feb 23s, followed by 28,000 of the Feb 30s. Number 3, 18,000 of the March 19 puts. Number 4, 17,000 of the Feb 22 calls. And rounding out the top 5 on a pretty light day yesterday, 15,000 of the Feb 24s. Wednesday was the big dog of the week, at least so far. We'll see what today shakes out at. 674,000 contracts on the tape for Wednesday. The big dog was actually pretty big on Wednesday, 111,000 of the Feb 24. So that gets to why that strike is now such a presence in our top 10 most active listeners. 111,000 of them going up just on Wednesday. So a lot of action there, followed by 50,000 for number 2 of the Feb 20 puts. Number 3, 43,000 of the Feb 17 puts. Number 4, 25,000 of the Feb 30 calls. And rounding out the top 5 on a decently active Wednesday, 23,000 of the Feb 21 puts. Tuesday also looking respectable, 554,000 contracts on the tape. The big dog on Tuesday, 53,000 of the March 30s. Followed by number 2, 28,000 of the Feb 20 puts. Number 3, 27,000 of the Feb 23 calls. Number 4, 25,000 of the Feb 18 puts. And rounding out the top 5 on Tuesday, 23,000 of the Feb 17 puts. Monday looking pretty anemic again, only 413,000 contracts on the tape. Still, it is good to have a tradable Monday again. We've been closed, seems like, for a while on Mondays. 23,000 was number 1 on Monday of the April 24 calls. So the 24s across the board getting some love this week. Number 2, 22,000 of the Feb 18 puts. Number 3, 21,000 of the Feb 17 puts. Number 4, also 21,000 of the Feb 50s. So is that a bit of a collar with a 50 call kicker? It does line up OI-wise or volume-wise, interestingly. I'll have to go dig and see what Monday's numbers hold in store for us. And then rounding out the top 5 on Monday, 18,000 of the June 20s. Those are interesting. 18,000 of the June 20s. Mr. Dave, when you're not just slinging Tesla hither and yon, anything catching your eye out there in the world of the big mothership VIX options this week, sir?
Well, I was just digging into the Feb 19 puts that you were talking about going up on the tape today. That looks like it's part of a spread here, and I'm just looking at it. What I really like to do every day is I'll pull up time and sales in the VIX and in VIX products, and I'll go through it and I'll sort by the highest volume. I'll sort it by quantity and see what's going on. And I'd recommend for viewers to just go through that every day, whether it's an individual equity you're focused on or if it's VIX products, and just look through your time and sales a little bit. A lot of times, especially with VIX, it can be a little bit deceptive because many of these big trades are often spreads. And it appears this Feb 19 put this morning, it looks like they bought the Feb 19 put and sold the 16 and 22 put. But yeah, it's been a lot of overwriting, and I think it's a lot of hedge funds are just they're selling these way out of the money calls as just a source of income against their portfolios. I think that's a lot of what's been going on lately.
Also, somebody today going out there for the 65 par vertical. So all sorts of fun going up out there today. But you're right, looks like those 19 puts did go up as a spread as well. So a lot of action going up out here today and indeed this week. Mr. Rocklops, anything catching your eye out there in the a little bit more active, even though the ADV doesn't say so, VIX options this week, sir?
It's like I said, we've starting to see a little more paper down, sneaking around the 16 handle in the outer months. Not a ton, but they're starting to generate some interest. So I found that quite interesting, to be honest, on that score. So yes to that one, as far as that goes.
I was just looking here, and it looks like back on Monday, listeners, that 17-18 put spread did go up. That was just a put spread, but the calls looks like they were about 40 minutes before. So it doesn't look like it was even though it lines up volume-wise, it doesn't seem like it went up unless they legged it, but it doesn't seem like that's the case. But it does say the put spread did go up late, so some of the executions were a little bit wonky out there, but doesn't seem like it was a crazy collar, even though the 50s, they got a dime for those. So not a heck of a lot of juice to be found in those, but intriguing stuff nonetheless. Let's keep on rolling out to some other intriguing products out there. We got good old SVIX, as you might imagine, roaring back to life. Listeners out there, we talked recently about how it hit its high of 1779, something like that. Obviously, blowing the doors off that today, a new 52-week high today of 1840. That's pretty much where it was when we kicked off the show, up about 1.5 points. It's given up about 0.4 of a point now, back down to about 1810. Dave, before we get into that really quickly, we haven't had you on since these products returned to the marketplace. So let's start there. You're Mr. Short Vol Show. I got to imagine you're intrigued by an inverse vol product, but what are your thoughts overall on the return of an inverse vol product, in this case, the SVIX variety, sir?
Well, I was never a huge trader of those. I caution people just to be careful if they're just going to own these, because some people, there's the idea people have of just kind of buying these and hanging on to them, and that can be a little risky. So I sort of caution people about that. I'm definitely a fan of the UVIX one as well, the new one. It would be nice if we could get weekly options in it, of course, but more leverage products, the better. It spreads out. It adds liquidity to the marketplace and gives us more stuff to play with. So I'm a fan of anything we can add to the volatility atmosphere here.
Yeah, a lot of people were kind of watching this one. It was a big story when it launched, and then other things happened in the market that kind of usurped it. And it never really seemed to generate the numbers that were equivalent to the amount of interest it seemed like it had pre-launch, at least from an options perspective, underlying a little bit of a different story. That remains the case again today, listeners. You have SVIX hitting a new high, and it can't even muster 1,000 contracts, 855 contracts. That's pretty good considering the ADV fell off a cliff last week. It was down about 400 contracts to about 600 something. So nobody was touching SVIX over the last week, even though it was hitting new highs last week too. Kind of weird. But nonetheless, no love. The big dog in terms of top positions out there in SVIX, let's just do the top one because that's the only one that has any size. There's 1,000 of the March 25 calls out there today. But let's get to, Dave mentioned that this is kind of the big talk in Vol Town right now. This is what we were waiting for, Dave. This is the day. This is the reverse split here in UVIX, much anticipated UVIX and UVXY, both kind of racing each other to zero. UVIX getting closer first, so they decide to do the old reverse split. I have to say, I am completely underwhelmed by this reverse split. Here we are. We go into it. We were at about a 3 to 4 handle, somewhere in that range. I was expecting somewhere in the ballpark of 10 to 1. I was hoping for something close to a 40 handle when I fired up my screens over there after the reverse split. Imagine my disappointment when we got to about a 20 handle, and that was about it. And we've already given up a ton of that, listeners. We're back to an 18 handle, 1820 right now out there in UVIX. So at this rate, they've already shed 3 points of this reverse, but they're going to be back below a 10 handle again by next week. We're going to have to do this whole stupid dance over again. So, Dave, I'm curious. You live in this realm all the time. You are Mr. Short Ball out there. What are your thoughts? You said you like the UVIX. What are your thoughts on this? I don't know. Am I just too cynical? Am I too jaded at this point? Or are you with me that this was kind of a middling reverse split at best?
Yeah, there's not a lot of volume. And the thing is like when you've got a product that just doesn't have hardly any volume, it just makes it very difficult to play. I mean, because you know that you can't get in and out of stuff easily mid-market, and it just makes things harder to deal with. And this product hasn't taken off enough. It would be nice if we could get weekly options in it, but right now the volume doesn't justify it at all. I'm happy that it did reverse split because it gives us, it's better opportunity now that it's a little bit higher, but very unattractive when you don't have enough liquidity and volume. I mean, the markets are relatively wide, and it's just, they'll let you get in, but when you try to get out, all of a sudden you're having to give up 20 cents, 10 cents here and there, and that's your profit going out the window. So it's just not at the level where it's something that's attractive to me at this point, just due to the volume.
So you're not slinging a lot of UVIX yet, then, fair to say.
No, and I am buddies with some of the people behind it, so I wish them well and everything, but it's just the volume hasn't gotten up there yet.
That's another thing that's surprising. This was a good chance for them to steal a march on UVXY, maybe get some volume as a result. UVXY is still hanging out in a 4 to 5 handle range, and here comes UVIX all of a sudden going up to a 40 or something like that. People would be attracted by that. You might see that ADV, I don't know, get up above the anemic couple of thousand that it has right now, and yet not the case out there. Mr. Rock Lobster, am I just becoming too jaded here, too cynical, or is this just kind of the most resounding meh reverse split we've ever had?
Well, the problem is we're stuck between what we would like the reverse split to be and what they're giving us. If they want to make people excited, give us 8-1.
Yes,
9-1,
you want to engender some interest in your product. This is marketing at the end of the day. This is a marketing move at the end of the day, is it not?
Because they just keep splitting it, forever, right? Because we all know what the deal is. So it's, I find it frustrating. And we tried to pile in and buy some put flies yesterday. I never filled anything in UVXY. It was real annoying. And to the reasons that Dave already alluded to, it's just freaking annoying. So, yeah, give us something to sink our teeth into, and not a $20 split product. It was, and now what is it? $18? It's already down $1. So it wasn't going to drop like 10% or 5% a week. Especially if VIX cash starts to go down. I mean, UVXY will get just smoked. So, if you start to see a 17 or 16 handle on a percentage basis, that's that could take $5 out of UVIX pretty quickly. So anyway, I agree with you. It has been slightly underwhelming.
I mean, the whole point, too, is also to keep it at a tradable level. Once we get below the 10 handle, everyone starts talking reverse split again. We could be there in less than a month.
Yeah, easily.
2 weeks.
Especially if we actually get VIX actually goes down.
So yeah, I just don't know.
Yeah, I think they're focused on attracting buyers of the product. So they want a low price so that people will buy the product, and that's the opposite of what we're focused on.
Yeah, so that is.
We're opposed. What the product people want and what we want are the opposite things, and it's not meshing.
I suppose they need to understand the use case for their product, though. First and foremost, I would think. I need to talk to these folks. We need to get them on the show. We need to set them straight.
They think it's going to go into somebody's portfolio as a hedge, and several times, by the way, like, okay, do not put this in your portfolio as like to leave it there for the year as a hedge.
Yeah, no.
We make video after video telling people not to do that.
Yeah, facilitating buy and hold paper
in
this.
Backwardation, or we're starting to, and the curve gets a little flat, then you're going to get some action. I mean, most of the time, it ain't going to go well for you.
Yeah, facilitating buyers of this underlying is borderline criminal. This is not a thing you want to be facilitating out there. So yeah, this is all sorts of crazy to me. And hopefully they enjoy perpetually reverse splitting, because if they keep this up, that's what they're going to do. If they keep reverse splitting to 20 again to keep the price manageable, they're going to be reverse splitting every month and a half. So this is just that, and that becomes absurd. So there's a lot to not like here. Not on top of the liquidity and everything else. Listeners, I'm with you. I tried to put on some stuff. Who didn't want to look at a put fly after this thing reverse split? And who didn't look at it and say, "Oh my God, what?" and just said, "The hell with it," and washed their hands of it completely. Because what else could you do? These markets were an atrocity. Let's go out to something that's a little bit tighter, Mr. Dave, because it gets a little bit more paper out there. It's your other preferred vehicle, UVXY. Was at a 4 3/4 when we kicked off the show, down about 3/4 of a point. Let's see where our friend is hanging out right now. 480 odds, so gaining a little bit back. So I'm guessing your preferred vehicle right now is UVXY, Dave?
Well, no, it's too low for me to really trade it. It's annoying when you're trading the 5 calls. I did see a trade go up today. It was like 1,000 lots. It's not marked as a spread, but it went up at the same within a minute. It was the June 5 put and the June 4 call. I don't know if they sold the strangle, but no, I hate it at $5. It just doesn't do anything for me. I won't trade it until it reverse splits. And hopefully it reverse splits to a higher level. It's interesting, though, when you were talking about put flies with the other one, the SVXY had decent paper for a while and was good for call flies. And hopefully that other product gets to more volume like this. Because obviously UVXY has decent volume and you can actually get in and out of stuff. But when it's a penny wide and a four and change underlying, it's just of no interest to me at all.
Dave's a Goldilocks vol trader. The UVXY too low, UVIX too crappy. So the Tesla's just right. I'm just going to sling Tesla until UVXY reverse splits. I'm getting what you're putting down now here, Dave. All right, I got it now. All right, let's keep on rolling really quickly because we're coming up against it. Man, we've been chatting a lot about vol already. The show's almost done. Let's do a really quick run through of VXX. 11:10 when we kicked off the show, down a little over a point, about 1.1 points out there. I'm curious for you, Dave, really quickly. We haven't checked in with you in a while, obviously, since all this VXX crap happened last year as well. Have you washed your hands of VXX like a lot of our listeners out there, or do you still pay attention to it?
No, I still pay attention to it. And it has decent liquidity, and you can get stuff done in there, even more so than UVXY most times. It's the same old thing, though. It's like it's gotten down to this low level. It's like everything's in the basement here. And it's frustrating, but I certainly once it reverse splits again, I certainly will play puts to the downside. And I had some great trade in there over the last couple of years, trading sort of out of the money puts and spreads and whatnot. But now with it, approaching single digits again, it's just hard.
The ADV looking decent today, 56,000 in VXX. The volume today, 56,000. The ADV coming in again down to about 59,000, down about 5,000 from this time last week. So the ADV not moving in the right direction, but today might turn things around out there. The big dog out there, let's just do a top three really quickly because we are coming up against it. Number 3 in VXX, about 13,000 of the March 17 calls. Number 2, 16,000 of the March 25s. And the number 1 size open position in VXX right now, 17,000 of the March 20 calls. In terms of single name vol, we're hot and in it these days here, listeners. Earnings season, hot and heavy, big names popping off this week, many more coming up next week. If you want all that data, the earnings move report, earnings season, and a whole bunch of new earnings trades reports for you guys to sink your teeth into, all completely free because we like you folks, courtesy of our friends over there in Orat's land, then there is only one place to go, theoptionsinsider.com. Click on the options news and articles tab. You'll see all that stuff there. Start clicking through the earnings stuff and you'll see content for days. We've got all the names coming out this past week, ones that are coming out next week, like Spotify and EA and McDonald's and you name it. Earnings season right now hanging out at 111%. So looking fairly robust, but there's only about 90 names have reported as of the time of this report. So obviously, many more to come out there. Also, a bunch of new earnings trades that we've added, buying a bunch of straddles and calendars and exiting a few as well. So if you want to see what we bought, what we sold, all the exits and entries, theoptionsinsider.com. Click on the options news and articles tab. As we keep on rolling, it is time for that part of the show, listeners. The one Dave has been dreading. It is time for the crystal ball.
It's time to peer into the future and reveal what the volatility gods hold in store. It's time to look into the crystal ball.
All right, everybody, welcome to the crystal ball. And really quickly before we dive into that madness, our question of the week this week touches on a subject we were just talking about earlier on the show, this whole zero DTE phenomenon. We said this zero DTE trend, it's all the rage, the subject of a lot of debate at this week's STA Chicago conference. A lot of you guys out there are clearly trading this in large numbers, but at the end of the day, the question remains, is this zero DTE explosion, is this a good thing for the options and the volatility markets in the long run? We gave you 4 choices. Obviously, there's many different ways we could carve up this onion here, but 2 yes, 2 no. Yes, it's a good thing because it gives retail cheap access to SPX. Yes, it's a good thing because it's enticing more overall traders. At the end of the day, more volume is a good thing. Or no, this is just gambling paper, or no, my personal favorite, they're gamma bombs. Mr. Rock Lobster, we'll start with you, sir. What are you voting for? What do you think our audience is voting for?
Sorry. I like gamma bombs.
Gamma bombs are fun. So I'm going to put you down for the gamma bombs?
Yes. Yeah.
Gamma bombs for you and gamma bombs for the audience. Mr. Dave, same question for you, sir. Are you down with this? You think this is a good thing, or you think this is a bad thing? And then what do you think our audience is voting for?
I think if this enables the risk to be spread among more hands in the world and it adds liquidity to the overall pool of people who this risk is spread out among, then it's a good thing. The question, we just have to make sure that people are educated before they jump in and they know what they're getting involved in and they know what risk they have. And that's kind of, I guess, Andrew and my job there. I like your gamma bomb, though. I'm going to keep that with me. So
feel free to borrow that. Our licensing rates are very reasonable out there. And right now, it's a pretty evenly split poll, actually, with exactly a third saying it's a good thing for cheap retail SPX access. Then right behind it, nearly 28% each. So it's a tie between no, this is just gambling, and no, they are gamma bombs. So actually, if you add up all the no's and all the yeses, the no's are taking it right now. Only 11.1% for yes, this is enticing more traders, enticing more volume. So right now, the balance of our poll is no, they're not good things, which is intriguing. Let's keep it going. We had a comment here from Andrew Shapiro. He says, more options to express opinions are never a bad thing. Zero DTE is just a tool. Can gamma just as recklessly on a longer-term expiration? I guess he's saying longer-term stuff can be a gamma bomb as well. Potentially. It's a little bit more difficult, but I see what you're putting down there. Let's keep on rolling into the moment you've all been waiting for, listeners, the crystal ball out there for this week. Our friend VIX, we was below 18 handle ever so briefly, hanging out right now at about an 18.15. And you know what? Only one of us on the panel last week had an 18 handle. We all roundly mocked him for it. It was the once and future Dr. VIX. He didn't win. He's about 0.35 away, but he had an 18.5. So closer than myself or the meatball. I will say that. I was feeling more vol last week, so I was looking all right until I was looking horribly wrong. 2165 is where I was hanging out this week, so no joy for me. The meatball's palindromic nonsense was at a 20.02. No joy for him as well. We broke through the 20 handle a while ago. And then Mr. Rhodes hanging out in an 18.5. Looking at a lot of our listeners, I see a bunch of high teens. I don't see any 18 handles, so no joy for the listeners out there this week. That means Mr. Dave, our listener, or I should say our guest, was the closest last week. So that means you get to go first this week, sir. What are you feeling for VIX this time next week, sir?
All right. Well, I don't want to hedge my position with this, and I don't want to give myself bad luck, but I'm going to go with the 17.5.
What a surprise that the short vol show guy would go lower. I can't believe you would say such a thing. Shocking out there. Well, Mr. Meatball was the next closest. So as such as it was, over almost two handles away. But Mr. Rocklops, that means you get to go next, sir. What are you feeling for this time next week?
What did Dave say? 1775?
17.5.
17.5? Wow. That's a tough one. Okay, we're 18 now. I won't scum them by a penny. I'll scum them by a quarter. So I'll go 17.25.
Dumbing them to the dark side. 17 and a quarter. I see what you guys are putting down. I see you're thinking post-Fed. If they're this willing to crush the vol now, post-Fed, they're just going to blow the hell out of it. I can't take too much fault with that supposition. But, a lot of people are playing to the short side. I'm going to go the opposite way. Listen, I'm going to say we're going to get a little bit more vol. Maybe the Fed spooks us a little bit with a little bit of that hawkish just jab of the knife that spooks the markets a little bit. Because we are obviously, we're whistling past the graveyard again here when it comes to vol. We're just saying, pay no attention to that man behind the curtain. And that means we are poised for perhaps the other shoe to drop. So I'm going to say not a ton of vol, but more vol. 1933. All right, listeners, that is going to do it for us this week. Ran a little long, but hey, can you blame us? There's a lot of vol to talk about out there this week, particularly on the short side. Mr. Dave, good to have you joining us back on the show for the first time in over a year. Obviously, a lot of new listeners have joined us since your last appearance, sir. So let's start there. If folks want to check out your show, where should they go? What should they do?
So David Lincoln on YouTube is where I'm at and at the famous Dave, FAMIS Dave on Twitter. You can find me there, and feel free to leave a comment, reach out to me, and I will respond.
There you go. Check him out. Mr. Short Vol Show at Famous Dave over there on the Twitters there as well. Look at our listeners here. Got a lot of 20 handles coming in. So, Options Queen's 18.5, so she's feeling a teen handle as well. But getting a lot of 20. I thought I was going to be the most optimistic guy, but 20 handles. There we go. Intriguing the way our audience goes. Mr. Rock Lobster, same question for you, sir. If folks want to get all the deals, where should they go? What should they do?
Optionpit.com. Ask or call 888-TRADE-01. Ask for Ted or Andrew. And if you heard this show, you get 10% off any one of my amazing programs that teach my students how to make money. I believe they're all up for the year this year and last year. I have to look at all of my numbers, but I had some killer products and programs last year. So anyway, if you want to learn how to trade options, come on over to optionpit.com.
Optionpit.com is the place to go. We got to get on out of here, listeners. So those of you on the on-demand side, that will conclude your broadcast week. Thank you for joining us throughout the week. A lot of great content coming at you. Hope you enjoyed it all. Of course, if you missed anything, it's all there on the network feed or on the Volatility Views feed for you to enjoy at your leisure. If you're not listening to the full network feed, what are you doing? You're missing out on nearly a dozen shows. Of course, those of you on the pro side, hang out, make your vol guesses in the chat. We'll be back in a little bit, myself and the Rock Lobster, to break down the mad week of unusual activity. There's a lot of stuff going on out there to break down, so that should be fun. If you don't know what I'm talking about, listeners, theoptionsinsider.com/pro is the place to go to learn more. Get in there quick so you can join us for the show out there today. And we're back again on Monday with the old OB all the way through to another Friday, another episode of Volatility Views. Stay safe out there, everybody.
Volatility Views is brought to you by NASDAQ. From its inception, NASDAQ has been an innovator and agent of change in the financial markets. It's in our DNA, from the development of electronic trading to our drive to bring enhanced functionality and world-leading technology to our suite of 6 options exchanges. We exemplify customer focus, consistent technology, and streamlined solutions. Now NASDAQ is proud to launch the NASDAQ 100 Volatility Index, ticker symbol VOLQ, to its suite of exchange indexes. VolQ uses only at-the-money options to provide a precise measure of NASDAQ 100 volatility. Learn more about this exciting new volatility product at www.nasdaq.com/VOLQ. NASDAQ, leading the U.S. options market and continually rewriting tomorrow. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.